Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. What a solid comeback on the Lal Street, a day ahead of budget. In fact, the Nifty ended higher by about 200 points. We had seen a similar sell-off yesterday. We saw the Nifty shave off 200 points yesterday, and all of yesterday's losses have been recouped in today's session. In fact, the mid-cap index has managed to hit a fresh high in today's session. In fact, 45 Nifty stocks ended higher today. HDFC Bank and Reliance Industries, top two gainers, in fact top two Nifty contributors today, and all the Nifty Bank constituents managed to end in the green. Bank of Baroda being the top gainer. In fact, Sensex also rose somewhere around 600 points. Nifty Bank Index gained 600 points. Among the big gainers, you had the likes of Dr. Reddy's. Healthy set of numbers came in earlier this week, and it has been on a gaining spree ever since. And Sun Pharma, other one, reported good set of numbers. Profit and margins have beaten estimates, and that's clearly reflecting in the stock prices. Both the stocks have lifted the pharma stocks higher in today's session. The Nifty Pharma pack, in fact, rallying somewhere around 3% or thereabouts. Autos moving higher ahead of monthly, auto sales data, which will be trickling in tomorrow. Eicher Motors and Tata Motors, in fact, top two gainers when it comes to the auto pack. Maruti reported numbers. Earnings were better than estimates. The profits, in fact, bottom line grew better than estimates, and revenues were in line. Stock was up somewhere around 2%. PSU Banking Index also extended its stellar run from yesterday. So 2% kind of gains coming in on the Nifty PSU Bank Index. L&T, this stock was among the top losers today. Of course, margins came in as a big disappointment in the third quarter, and the stock has been, in the red ever since. Aside of that, if you look at some of the other movers on the Nifty, you had the likes of Titan, Tata Consumer and BPCL. These were among the few losers that we had today. Aside of DRL and Sun Pharma, we also had Divi's Labs that was gaining. Cipla, Bajaj Finserv, after yesterday's losses, has recouped its losses and was among the top Nifty gainers. SBI, remember the numbers come out later this week, and the stock was up in about 2% kind of gains coming in there. But without any delay, let me also bring on board our guest for today. Joining me is Milan Vaishnav, who's the founder of Gemstone Equity Research, joining in. Great to have you on the show this afternoon, Milan. Going into the budget, the mood once again looks upbeat, but we have been fairly volatile this week, right? Day before yesterday, we saw a solid run, 400-point gain. Yesterday, we saw 200 points being shaved off, and today as well, we have recouped those 200 points. So, going into the budget tomorrow, how should traders really position themselves?
Good afternoon, Nandita and all the viewers. See, the thing is that as we approach the budget, we need to know a couple of things, especially the retail traders, that this is technically not a full-fledged budget. What we call it is an interim budget, is technically a vote on account, where the government just presents a statement of income and accounts as sort of this, and normally a major full-fledged budget would follow once the general elections are out of the way, and it is usually the new government that would present the full-fledged budget. But going into this interim budget or vote on account, we have had this interim budget in 2019, and that's where, contrary to the expectations, government had come up with some important announcement, and that is precisely what is expected in tomorrow's event as well, which is by far one of the most important domestic events. Now, that being said, what I'm looking at is that rather than chasing the markets or participating in the volatility, I would stick to the broader levels and would very strictly go by what the charts are telling me. And the chart says that Nifty will have to go above, will need to cross above 21,800 and stay above there to extend the rally towards its previous peak. So long as 21,800 is not taken out, I'll approach the market with some caution. More so when we are seeing this amount of volatility, where the markets are 400 down, 400 points up on one day, 200 points down, and again 200 points up. This kind of volatility gets a little difficult to be that can be handled by the retail investors.
Right. Let's talk about, certain sectors that were doing well today. Pharma pack, the index gained 3%. Dr. Reddy's, Sun Pharma, Cipla, Divi's Lab, all of them firing on all cylinders today. But among the four on the charts, which one is looking more attractive at the current juncture? Would you say stick to the likes of Dr. Reddy's, or do you think Sun Pharma could be a better play? in the large cap pharma place?
I would now shift my attention to Dr. Reddy's because Sun Pharma is basically in a very strong uptrend. It's quite overextended on the charts as well. So all we can do is that one can stay invested in Sun Pharma while effectively trailing our stop losses higher. Whereas Dr. Reddy has given a solid breakout at current levels, and it has room to add significant upside from what it is right now. So my preference would be more for Dr. Reddy than in Sun Pharma.
All right, preference for Dr. Reddy's vis-a-vis Sun Pharma. But what about an L&T? Numbers were good, but margins, missed estimates. Order inflows were also pretty good, in excess of 20%. But, of course, the stock will be in focus given the fact that, the capex figure from the government will be watched out for in the interim budget, right? So, going into the budget, should one really look at L&T because this stock will be in focus tomorrow as well?
Yeah, see, L&T, it also remains in a secular uptrend. It's been trending higher, making higher tops and higher bottoms. So long as anyone is invested in the stock, one has to stay invested. And we need to keep an eye on the levels of 3400 because 3423 is the 50 DMA, which has by far acted as support on closing basis. So long as stock is above 3400, it might continue to stay in the primary uptrend.
Right, we continue to stay in the uptrend, but PB Fintech, swung to profits in this quarter. In fact, for the first time, it has reported a quarterly profit. The stock has surged somewhere around 10%. The stock has already surged quite a bit, within the new age tech space. So here on, would you say it's looking a bit overbought at the current juncture?
Yes, it is overbought. But what we have seen today is a very strong breakout once the stock opened and stayed above 927 levels. So what has happened that the stock has dragged its support levels higher from around 845, which was the 50 DMA earlier, to now 927. So even if some retracement happens, 927 will continue to act as a strong support for the stock. So long as it is above 925, 927, it has the room to move higher. But yes, it is a bit overextended and some consolidation at these levels cannot be ruled out.
All right, that's the view then. What about cement stocks? The likes of Ambuja. Today, of course, in a strong market, Ambuja didn't really participate, down about 2% or thereabouts. ACC, Ambuja, Ultratech, anything that's catching your fancy?
To be frank, no, nothing, because I'm seeing that the last phase of up moves, say for example in Ambuja, where it's been marking higher highs, the first high, if we take it around 532 levels, the other high coming at 554, the third high, that is today's high, coming at 586, all these incremental highs are coming with a negative divergence on the RSI against the price. So RSI is not making higher highs, and therefore I will now take this phase of up move with a bit of skepticism, and I would focus more on booking profits and taking money off the table from these stocks.
Right. Of course, auto pack in focus, the likes of Maruti. Maruti came out with numbers. I think we've already highlighted that, I think, in the opening remarks. But for Maruti particularly, in the last 1 month or so, the stock has lost some bit of fizz, right? Just about 1% in the red when it comes to the monthly returns. And even on a 6-month basis, I can just see 5% kind of gains, in fact 5% kind of returns. How would you really compare Maruti with the Tata Motors at the current juncture?
They are technically posed in a very different way. Let me first begin with Tata Motors. Tata Motors has been on a very strong uptrend, and today as well, it has marked a fresh high, and right now it remains quite overbought and a bit overextended on the chart. So what we can do in Tata Motors is to effectively keep trailing the stop losses higher and exit that stock, or focus more on booking and protecting our profits if certain levels are violated on the downside. That way we'll be able to protect the maximum amount of profit that we have had from this uptrend. But Maruti is slightly differently placed. And in fact, now, even within the auto sector, we might see some stock rotation happening, that, for example, money moving out from stocks that have run up too hard, like Tata Motors, to the ones like Maruti. Maruti has taken a consistent support at its 200 DMA, which is at around 9886. So long as stock is above 9800 rupees, it has given us an opportunity to enter this stock at present levels.
Right, that's the view then on Tata Motors and Maruti. But HDFC Bank, I want to get in your thoughts on this one. Of course, it has been underperforming, but today it was among the top contributors on the Nifty. Would you go with the camp which believes that the stock should be bought at bought on dips, or would you avoid, in fact, suggest or advise investors to avoid trading into this counter?
No, in fact, I would suggest otherwise, that this recent decline that we saw in form of reaction to the numbers has given us an excellent opportunity to get this stock at lower levels. Today, we have seen a formation of bullish engulfing candle, which is quite a valid one because it has happened after a significant downtrend. And a move above 1440 has triggered a fresh entry in the stock. So while maintaining a reasonable stop loss of around 3 to 4% from the current levels, perhaps this is the time that we can use these levels to start accumulating HDFC Bank.
All right. Another one from the PSU banking lot, Bank of Baroda, numbers came out. The stock was up 4% or thereabouts today, and the last 5 sessions already run up 10%, right? At 52-week high now. What should the strategy be here?
Bank Baroda is a fresh buy. We had seen the levels of 240 getting formed somewhere in the very early days of January, and after some brief corrective move, the stock has staged a breakout. So while maintaining a stop loss of 238, it's time that we stay long in this stock. However, a very strict stop loss of 238 or a close below 238 is advised.
All right, that's the view then. Last question really, as we head into the interim budget, how would you be positioning yourself in railway stocks, because those will be in focus on the back of the government's push for capex?
I would stay invested. If I am long, then I would continue to stay invested. And if I'm not long, and if I see the stock taking out the prior highs, then I will enter the stocks with a reasonable stop loss levels in place.
All right, that's the view then. With that, Milan, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us. Look forward to connecting with you once again for our shows in the morning sometime.
Always a pleasure, Nandita. Thank you.
Thanks a lot. Well, that was about the markets, but of course we have the all-important interim budget tomorrow. Of course, key numbers to watch out for will be the fiscal deficit number for FY25. For FY24, it stands at 5.9%, but for FY25, the expectations range between 5.3 to 5.5%. And aside of that, it's the capex figure that will be watched out for. Last year in the FY24 full year budget, we saw a 35% jump in FY24 capex. But this time around, it could slow down a bit, and 11 to 12 lakh crore is the kind of figure that we are, economists are expecting, and that could entail a growth of some around 10 to 20%. Nominal GDP for FY24 that has come down to 8.9%, but for FY25. The estimates range between 10.5 to 11%. Aside of that, the market will also be watching out for the borrowing figure. Net borrowing for FY25 expected around 12 lakh crore rupees or thereabouts. So lots of announcements, really the big numbers that the street will really be watching out for, aside of whether or not the government manages to balance out a growth budget, or it kind of goes all out and spend, given the fact that it is an election year. So yes, big day tomorrow, and of course we at Moneycontrol will be getting you live coverage, in fact right from 6:30 a.m. in the morning. So don't forget to tune in, and of course we'll be having a whole host of market experts, economists, policymakers. So Moneycontrol is the one destination that you need to be on the budget day. But with that, it's a wrap on this edition of Closing Bell from me, Nandita Khemka. Thanks a lot for tuning in this afternoon. See you guys tomorrow. But till then, you stay tuned to Moneycontrol for all your other news and updates.